All right. Day Trader Jacob, is that my name now?
For the moment, anyway.
Man, it does my heart glad to see everybody coming to the defense of the little guy.
Oh, it's awesome. It's so exciting. This is like total catnip for me.
I mean, it's all fun and games, but
it's all fun and games until Wall Street is totally destroyed.
Yeah, when we engineer a stock market crash and all of our stocks go down, we're not going to be that happy.
All right. Let's do this.
All right.
All right, everybody. Welcome to the Other Life podcast, the only podcast in the world dedicated to exiting institutions through the internet. And wow, is it an amazing time to have a podcast dedicated to using the internet to overthrow institutions. Probably perhaps arguably the most interesting and crazy week in the entire history of American finance. Overstatement or appropriate statement?
Overstatement.
Say more.
But it's up there for sure.
Okay, it's up there. It's up there.
I think there's probably been something on the order of a couple of dozen weeks of this magnitude.
I think
in the history of the stock market. And this is the first time that we've seen a lot of the action really driven by social media, which, for people like me and you that live and breathe social media, it's kind of fun to see the first time that it's really taken a hold of the stock market and driven price action.
Exactly. I'm not saying it's the greatest magnitude of change in the American financial system in 1 week, but in terms of when you factor in just the technological aspects that are just completely new and wild, to me, in my viewpoint, I would make the argument that this is probably the craziest week in American finance ever, simply because so much of what's going on is fundamentally new, and what it portends is so phenomenal. So what we're going to do in this live stream, I have my buddy Jacob here, who is himself an active day trader. So, and he's actually immersed in the world of the Wall Street bets and all of this stuff. What we're going to do is we are going to first go over just WTF is happening. We're going to give you from beginning to end kind of summary and recap and explanation of what the frick people are even talking about with GameStop and Reddit and Wall Street and Robinhood. We're going to start with just a summary and basic explanation of everything you might be wondering about if you find any of that confusing. And then when we're done with that recap, we will go into our various takes on what this means, where it's going. For those of you who are tuning in for the first time, I'm a political scientist by training, by vocation. So people who watch my show know I have a kind of longer standing meta narrative around institutions and where things are going in this respect. So we'll have all different types of riffs and digressions on what's going on. So real quick, before we get started, please do subscribe to the YouTube channel. All right. And then click the little bell so you get notifications. A lot of you don't click the bell, so you don't know when I go on these awesome live streams, which I'm doing more and more of. Yeah. And also like this video because it's badass. I think you already like it.
Click the bell or Justin will break you up like the government broke up AT&T.
And for those of you listening on the podcast on your phone, if you like this, please, I would just ask you to go and leave a review on iTunes. I'm really trying to grow the show out more systematically right now. So I would just really appreciate your support. It helps other people find the show. And yeah, that's pretty much all I got by way of introduction. Jacob, I think we should get right into it. What do you think?
Yeah, let's do it.
All right. So take us back to the very beginning of this story with perhaps Roaring Kitty is the best place to start.
He's a good place to start.
So go ahead.
So I think, Wall Street Bets is the subreddit that is dedicated to making large risky bets on the stock market. They've kind of turned the stock market into a casino. That's the accusation against them. The accusation back is that for Wall Street, the stock market's always been a casino, and you get better odds anyway. So, Wall Street Bets used to be smaller. Even 2 years ago, it was, I'm sure we could look up the numbers, but it was not that large. And the first time that we really saw Wall Street Bets move the market. Like the idea that the subreddit could move the market started out actually with the SpaceX not SpaceX, but Virgin Galactic de-SPACing. When that de-SPACed, they got hyped and it moved. Virgin Galactic flew up after it came public. But it really, we haven't seen Wall Street bets move large stocks, like not really been able to move the market in that way.
And when was that Virgin Galactic moment?
That was late last year.
Okay, so there was some premonition that there could be internet-based movement of markets in this kind of wild and mimetic way about a year ago.
Yeah, they were pretty excited about that. Everybody was like, get the tendies, buy Virgin Galactic, ticker SPCE.
What is tendies?
Tendies is money.
Okay, there's all this lingo on Wall Street bets that you might see and not know. So I'm going to ask stupid questions. What is it referred to? Like tender?
Chicken tenders. So the idea is kind of self-deprecatory. It's like they're so poor that like having chicken tenders would be, like rich to them. So their idea of wealth is like having frozen chicken tenders.
They like to call themselves retards. That's a very common word I noticed.
Yes.
And so we'll go through the lingo as Jacob tells the story. So go on.
Not that I would ever drop the R bomb on air. I did that last
time. You're a good Christian. I appreciate that. That's why I had you on my show.
Okay, so let's go to Roaring Kitty. So this kid's sharp, man. Like, Wall Street Bets is full of people that have no idea what they're doing, that are YOLOing their entire life savings, which might be like $1,000 from their job at Wendy's on some stock play or another. But it also has some people that do serious stock analysis. And Roaring Kitty, also known on the subreddit as Deep Fucking Value. That's his Reddit name. Like you go back and you watch his GameStop video. He has a summary video from July, I think, where he's going over the thesis, and he really gets what's going on. Like, he's like, okay, this stock is priced for bankruptcy, but I don't think it's going to go bankrupt. And moreover, like when the next console cycle comes out, it's going to pardon, I've been drinking carbonated sodas. Bad for live on air. But he's like, when the next console cycle comes around, PlayStation 5, this thing, they're going to make a bunch of money, and then they can use that money to reinvent themselves. Like, sure, maybe in the long run, brick and mortar retailers are dead. Like the bear thesis on GameStop is this is the next blockbuster
and this
video.
Is how long ago he's saying this?
This is July.
And so Roaring Kitty is the name of a YouTuber.
Yeah.
On Reddit, he's known as Deep Fucking Value.
Yeah.
And so in July, he's basically saying GameStop looks undervalued, looks like it could be a legit business or it could bounce back. And it's not as bad as the market seems to suggest.
And Roaring Kitty is very abnormal for Wall Street Bets when it comes to his investing style. Like, this is what he specializes in, is like companies that are near bankruptcy, but like can turn it around. Like
and he's a young guy. How old roughly?
He looks to be in his late 20s.
And did he have a big YouTube following or what in July, like roughly?
No, I mean, you go back and look at even right now that GameStop summary video has like 16,000 views, and that's after all this has gone on. So he wasn't in his how to analyze stock videos have less than 1,000 views each.
Okay.
So I mean, people are copying his trades, but they're not necessarily like doing the hard work to learn how to analyze stocks like him. But I think he must have worked at. I would not be surprised if he worked as an investment analyst, like at a firm, doing it professionally, because he knew the lingo, he knew the tools. He was doing serious stock analysis here. And this story actually with GameStop, like, how did he get the idea? It starts a little bit before Roaring Kitty, and it has a Michael Burry tie-in, which I think is delightful.
All right, let's hear it.
I don't know. You ever seen this show, The Big Short?
The movie.
The movie, The Big Short.
Yep.
So it's about this guy. One of the main characters is this guy, Michael Burry, who shorts the real estate market in 2008, makes a big ball of cash. And the movie kind of sexes it up a little bit, where, he has this hedge fund and he's short all these mortgage companies and he's losing money month after month, and his clients are calling him up to redeem their money, and he's like telling them to go take a walk. He won't redeem their money, and he's losing money. And then finally, when the real estate bubble pops, he makes a ton of money, and he's a hero, right? I think he made a few billion on that. But Michael Burry, his hedge fund has to file like some sort of regulatory statements every now and then that show like what they hold, and Roaring Kitty reads these to get stock ideas. So one of the ideas that came across his screen from Michael Burry was GameStop. Michael Burry is huge into GameStop. So this is going to be Michael Burry's second fortune. I don't know if he's probably exited by now, but I imagine if you are an investor in Scion Capital, which is Michael Burry's hedge fund, you are a very happy camper this year.
So Roaring Kitty is reading Michael Burry's reports, basically.
Yeah, but he uses that to get idea flow, and then he's doing his own research on all the ideas. He's also reading a bunch of other funds too that of people he likes and respects. I mean, he has long videos on how to do what he does, and this kid's sharp. But he posts to Reddit this idea for GameStop over the summer. GameStop's trading at $4, and I think the market cap's something like 400 million. And part of the thesis is that this stock, not only is it not going to go bankrupt, and it's probably going to double, triple in value when people realize it's going to survive, but the short interest in the stock is over 100%. So it has 120% short interest, which means some of the shares of the company have been sold short more than once. Also, there might be some naked shorting, which is quasi illegal.
So explain there are two things there. Maybe just explain them briefly. The first, how can there be more shorts than there are shares?
Yeah, so it's very unusual. It means, this stock was hated by Wall Street, or at least by a couple of hedge funds.
Actually, let's go even more simple. Explain a short.
Sure. So there's two directions a stock can move, right? It can move up, the price can go up, the price can go down. And so when you make money, when you buy a stock and you're hoping for the price to go up, we call that being long a stock.
Right.
The opposite of that is being short a stock. You make money when the stock goes down. Right. And the way you do that mechanically, although if you're doing this on your brokerage, you probably won't see any of this. But the way it happens mechanically is your broker will borrow that share from someone else, and then you sell it in the marketplace. But now you have a liability to pay that share back. Right. So if the share goes down in price and you buy it back for less than you sold it, you can give it back, and you make the difference between what you sold it at and what you paid to buy it back.
But on the other hand, the potential downside is virtually uncapped.
Well, yeah, it's asymmetric is the problem. So if you want to be a short seller, you got a lot of things against you. One is, that borrow costs interest, so you get to pay for as long as you stay short. There's no way to be short for free. And the other is that if you're long a stock, the most you can lose is all your money. If you're short a stock, because a stock can go to zero on the low side. But if you're short a stock, the most you can lose is as high as the stock goes.
Right. So you can lose more than you actually have.
Yeah, you can lose an infinite amount.
Right, which is where things get dicey for the hedge funds that are trying to short GameStop right now.
Which is exactly where things are at.
Got it. Great. Excellent little finance review here. So now you were talking about how GameStop actually had more shorts out than there were stock available. Explain how is that possible?
Well, I think what's happening is you so you borrow a share to sell it short, and then someone else borrows. So someone is holding that stock. It's sort of like fiat money in a way, where how bank loans create like a higher money supply, because you loan out money and then someone deposits that money in another bank, and that bank uses the deposits to create more loans. It's like in a similar way. Like if there's a high enough short interest, like you're borrowing shares, you're loaning them to sell in the market, and then someone else is borrowing that same share to sell it again.
Okay.
And so the short interest got over 100%. And some people argue this should be illegal, or at least should be illegal going forward.
Right.
But
something else people might want to appreciate is that when you go long on a stock and you're invested in a company, you want that company to succeed. It has a kind of pro-social connotation to it. When you are short on a stock, you really are looking for that company to fail. And there are different subtle ways in which Wall Street actors can try to produce the future that they want in a way.
There is some reflexivity here, where like if your stock price gets jacked way high, you might be able to raise capital easier. You might be able to take out debt easier at better terms, because you'll be assumed to be a better basically you're be assumed to be a better risk. So definitely by driving the price of shares into the ground by shorting it a lot, you are potentially hindering their access to capital markets because they'll look like a bad risk.
Right.
And especially with GameStop. Sorry, I keep on calling it GameStock, which because they had quite a bit of a debt load, and refinancing that debt was part of the long thesis. But the other thing, the reason why having all that money short was part of the long thesis too, is because it can cause a short squeeze, which is the next thing we should talk about.
Right. So this is basically when short people decide, oh, this is getting too high, I want out. So to actually exit the short position, you have to effectively buy the stock, which further accelerates the price increase, basically, right?
Yeah. So when the shorts, to exit the position, the shorts have to act against their own interest. So it creates a prisoner's dilemma in some way, where when the first short out gets out at the best price, you have a stampede for the exits, and that can drive the price of the stock up quicker. So it's this positive feedback loop. And so, I mean, that was the thesis, back when GameStop was $4. But then, it had another thing happen to it, which was a Silicon Valley investor, the founder of Chewy.com, who is a billionaire, started buying up shares of GameStop in the fall when it was around $14, $15. He bought up 15% of the company and joined the board. And so that came to be indicative of, okay, that the likelihood of GameStop turning around and reinventing itself as a company, and instead of being the next Blockbuster of video games, being the next Netflix of video games, like that increased when Ryan Cohen, I think that's his name, joined the board. And so then people started getting hyped.
And this is where Roaring Kitty comes in, basically to say, oh, there's possibly a bright future for GameStop to reinvent itself. I don't think I think this company is undervalued is the message, basically.
Well, he sent out that message and he posted it to Wall Street Bets before Ryan Cohen was even involved.
Okay.
Like over the summer when GameStop was around $4. But by the time, GameStop was around $15, like that's when people on Wall Street Bets really started listening to him. Like he kept on posting updates on how his position was going. I think somewhere around like in the mid-teens, he went YOLO on it. So meaning he put his entire portfolio into it, which was, I believe, $700,000.
And that was when?
I think that was in the fall. It was somewhere in the mid-teens on the stock price.
And he's now made how much?
At a peak yesterday, he had 50 million.
And this is just a young man who had a few thousand followers on YouTube, posting videos based on his own research, essentially. Yeah,
and so I mean, today he was down 17 million, so up to 33. But yesterday, I mean, I guess the long story short is, I'm a big Hedgeye fan. I like their research, their stock research, and I don't listen to Wall Street Bets very much because their ideas tend to be really hit and miss. It's like maybe 10% of.
I would think so.
Yeah, I mean. I tried a bunch of Wall Street Bets trade and I didn't make a lot of money. I probably lost money following Wall Street Bets. So I kind of ignored the whole GameStop hype. But when Hedgeye put out a research report and they said, we buy this thesis, we're long on it. I'm like, oh, I can be long a Wall Street Bets idea and have Hedgeye behind, like Hedgeye's research, who I trust, who are like older than me, like they're like in their 50s and like, serious people like this idea too. It's like I'm gonna put make it my biggest position, and so I did that. But I think that was also part of the catalyst for it really the thesis starting to work, which was only a couple of weeks ago now.
Okay, so you got in on the GameStop play in part from reading Wall Street Bets. You just got out a little earlier than
way too early.
Others. Yeah, too early. Yeah, but you did come out on top with it.
Yeah,
you made money.
I made like 50% on my largest position. So.
Just to be clear, I don't own any of these companies. Just to be clear, but also none of this is financial advice. We're going to say that a few times, so just to be extra clear. So okay, so that's great background. So Roaring Kitty on YouTube, aka Deep Fucking Value on Reddit, is leading this charge, making this case that people should buy GameStop because it could reinvent itself and become much more valuable than the market is currently giving credit for. Now, on the other hand, there are these short buyers or short whatever. Short sellers. That's right. Who are basically have it out for GameStop. They think it's going to go down. They want it to go down. So they buy short stocks. And most famously or most notoriously at this point is the Melvin Capital Fund, right?
Yeah.
And so give us a sense of what happens this week to really trigger this thing that now everyone and their mom is talking about.
Well, yeah, I mean, it's gotten so big that it's really having systemic effects on the stock market.
Right, but do you know the story of like what happened this week? How did that kind of accelerate and kick off?
Yeah, I can talk about that a little bit. I mean, so basically, you're having well, I think these short sellers are just idiots. Like when you're looking at GameStop at back when it was $4 a share, that means your maximum win is $4 a share. Like you're trying to squeeze the last bit of juice out of a raisin, right? And then people were putting out research, like you knew that Michael Burry like bought up a few million shares. Like there was a bull thesis, and the people who were short were ignoring all this research coming out saying that GameStop is good. And if they were right, they were going to make $4 a share. And if they were wrong, well, now they've lost, at peak $360 a share. That's very asymmetric.
And they're holding how much? Give us a sense of the proportions. Like how big of a problem is this for Melvin Capital?
Well, Melvin Capital, I don't remember the size, but I know that they were down when GameStop was up to $70. I think they were down 15% on the year. So I think it wasn't a very large position, but they're probably down something like 60% on the year on their total portfolio now, which is catastrophic.
Right.
Catastrophic.
They could very well go under.
Oh yeah. Melvin Capital's probably going to go under. They got a bailout of a couple of $1 billion. They got an investment from another investment firm that the head of Melvin used to work with. And they blew through that in a day. And
something else people should note is that this is a very well-known, highly respected, generally very successful hedge fund.
I mean, these guys are huge, right? Like, I mean, Melvin's not a huge hedge fund, but I think their total portfolio value is in the handful of billions, which is probably bigger than all of Reddit combined. Mm-hmm. So, I mean, one of the myths of this whole thing is that it's Reddit driving the price. And I don't think that's the case. Reddit doesn't have that much money. What I think is happening is that the thesis started working, and then a lot of Wall Street's long too. Like a lot of other people's money started coming in on the side of Reddit. Because I mean, Reddit was hyping GameStop for months, and the short squeeze didn't really trigger.
Right.
And they were hyping a lot of stocks for months. Like I saw them hype Palantir for like 4 months, and it was trading between it was like 25, 24, 27 for like 4 months. Like Reddit, if Reddit really had that much power,
right,
it would have been flying to the moon.
So something you're kind of demystifying is that Wall Street Bets on Reddit does not have some sort of autonomous power to just pick a stock, make it go up real fast. It's really not that simple. Well, in this case, it's a fact that there was actually a bull thesis for GameStop, which was neglected, which is actually based on research, which you can make a strong financial case for. That intersected with the fact that it was a meme stock and got hype on
video games, right?
Yeah, that helps. I think
that's a big part of it.
That's a good point, actually. People might not. I didn't even think about that, really. In any event, it's not like Wall Street Bets can just pick a stock, they all start buying it up and hyping it up, and it just increases. It's not that simple.
No.
But this was a case where certain forces aligned, and Wall Street Bets was arguably the key causal factor that really triggered the short squeeze, which is what we explained before, which is when the price starts to increase, which forces short sellers to get out, which makes it increase even more. And that's basically what happened this week.
There's a short squeeze and a gamma squeeze.
Oh, break that down. I don't know. I understand shorting, but I don't know what a gamma squeeze is.
So there's a double squeeze going on.
All right,
and
school us.
Yeah, well, I'm not the best person to talk about a gamma squeeze, but basically, so people that make markets and options, so they're selling options short, or they're selling you an option, which is the right to buy a stock at a certain price in the future. And the issue with selling options is if you're selling a call, which is a bet that the stock will go up, and the stock does go up, you can be out an unlimited amount of money, and levered too. So what option sellers do is they hedge by buying the underlying stock to stay what they call delta neutral. So if I'm selling an option, which is the right to buy 100 shares of GameStop, then that option, if it's out of the, probably has a delta of something like 0.3, which means that for every dollar that GameStop goes up, that option's value will go up by $30 because it's a right to buy 100 shares. And so, but as the price of the underlying stock gets closer to the strike price of the option, the delta increases. And the second derivative of delta, is called gamma, which just comes from the Black-Scholes option model. And so this is called the gamma squeeze, because as the delta of the option goes up, the dealer has to buy more shares to hedge their exposure, which means that it's another positive feedback loop there when they're shooting themselves in the foot by trying to protect themselves. Just like a short squeeze, for the options dealer to protect their position, they have to keep buying the stock, which also drives the price up, which means they have to buy more. It's a catch-22.
Right.
So that's kind of new, and that is part of what's happening with Wall Street Bets, because Wall Street Bets is buying more options than people used to buy. In fact, we had the highest volume week for options in history this week. So that is a first.
Wow.
That is unprecedented.
Okay.
And that's because people realize that with an option, a short dated option, like a 1 week option on a stock, if it goes up 100% like it did this week, you had people making like 1,000%. I saw one kid make 10,000% on GameStop. He turned $500 into $50,000.
Dude, if anyone out there listening to this, by the way, happens to be active on Wall Street Bets and has made a good chunk of money on this recent chaos, and you want to come on the show, I would love that. Leave a reply or shoot me an email or DM me on Twitter. Yeah, just wanted to throw that out there.
I'm a very conservative investor. So I had GameStop as my top position at 17. But I sold most of my shares at 35.
I really want to meet a 17-year-old kid who just became a millionaire from nothing.
Yeah.
And I'd talk with them. That'd be awesome. So, okay, great. So the other big thing that happened just today, and by the way, I know this stuff moves so fast. So by the time you're listening to this, maybe things will be different. I should note that right now it's Thursday, and it is, Thursday the 28th at 4:26 p.m. At the time of this recording, GameStop is currently priced at 193.
256.
Oh, wait, it just changed?
Yeah.
Oh, wow. In the time that I
don't
didn't refresh my phone.
Don't
okay.
FUD my GameStop.
Oh, damn. Okay. So, so as of right now, one of the things that's most interesting and significant today is that the exchanges are now blocking people from buying GameStop.
Well, let's talk about.
Yeah, break it down.
Let's talk about why the move in the stock has people so upset. Like, why is it that nobody can talk about anything else? And well, first of all, you have people caught short, like Melvin Capital. With each day that passed, their position's getting worse and worse. But I think they're holding out in hopes that the GameStop bubble pops, and that they can get out at a smaller loss. But so far, that just hasn't been the case. I mean, today it's down a bit, but it's still like a catastrophic position for them. So these hedge funds could go out of business for sure, and other hedge funds that are short too. And the short interest hasn't declined. And so as some shorts have exited, new shorts have come in saying like, oh, there's no way GameStop deserves to be a $300 $40 billion $300 share $40 billion company.
Right.
And we're going to come short now. But at this point, the price movement is not about the company. It's entirely about market mechanics. It's about how many shares are there and who needs to buy them and how desperate they are to buy them. Reddit's trying to corner the market, which is why they're telling each other not to sell. Like, that's why.
But isn't this just what a market is? It's people bidding up and down a scarce resource.
Yeah, that's what they like the stock and they don't want to sell it. So you're going to have to pay more.
But are you making a case in favor of pausing or halting the buying and selling, or what?
No. I'm just saying this is what's driving. One of the things that's driving the price up is they're trying to corner the market. Like they're trying to buy and they're trying to hold, and they're not going to sell to the short sellers unless the short sellers pay as much as humanly possible.
Right. But it is crazy. Am I right that places like Robinhood are saying, all right, you're just not allowed to buy this particular set of stocks anymore?
Well, okay, let's get into why they're doing that a little bit. Okay, so you have hedge funds that can go out of business.
Right.
Next up on the list is whoever's selling these options. Like I don't know that they can hedge fast enough.
But wait, a lot of people are going to be already thinking, what's wrong with the hedge fund going out of business? This is what a market is, right?
Sure. So
is it weird or is it normal that Robinhood wants to prevent these hedge funds from going out of business?
There's definitely something I think nefarious about it where it's nobody cares if Robinhooders lose money, but everyone's upset if a hedge fundy hedgy does.
But is it a systemic risk prevention type of problem?
I think there is some systemic risk.
Right. So this is where it gets a little nuanced because you could imagine a situation where so many hedge funds go out of business that it actually has downside consequences on the economy as a whole, the whole like too big to fail problem. But is that really plausible here?
Let's walk through some of the potential risks. And not all this stuff have I researched exactly to see like if the magnitudes make sense. But so market makers can go out of business, right? Like Citadel, which makes markets in GameStop options, and who also manages the Robinhood order flow, by the way. So they could blow up as well. Because I don't think that they can hedge their position fast enough on the options they're selling when the stock is moving this fast. So they're going to be. I don't think they're delta neutral anymore on the calls they're selling. So Citadel could go out of business. And then also, what happens when these shorts go bankrupt and they owe this stock back to someone? You might find a lot of people that have GameStop in their account. A lot of people might find that their broker can no longer has the shares for them because they lent them out. And so I think a lot of brokers could take multi-billion-dollar hits like E-Trade, Robinhood. Like Robinhood could go out of business. I just saw someone tweeting that they were drawing down their credit lines to cover some liability that is gone pear-shaped for them in the last few days. So you could potentially see brokers, market makers, and hedge funds all go out of business. And another thing that happened, yesterday was a big down day in the market. It was like, I don't know, you don't see a day like that more than once every couple of months. In this market anyway. And I think what was happening was a lot of hedge funds were selling off their long shares to pay for covering their shorts. So there is a potential that Reddit engineers a market crash and probably screws themselves over in the process if they drive their brokers out of business and there's a long bankruptcy process or something.
Right. So in some extreme case, if the Wall Street Bets pro GameStop viral movement were to become big enough, it could actually tank so many different market actors that the economy itself could be hurt in some non-trivial way that they would then feel themselves.
Certainly the stock market. Yeah.
Yeah. So, okay. Fascinating. So Robinhood, as of today, has basically put up a hold on trading these meme stocks that are hot on Wall Street Bets, not just the one we're talking about, GameStop, but other ones that are big. Like, what are the other ones? The main ones, AMC, the movie theater, right?
Nokia. Let's see, a couple of others. Another thing you have to understand.
Bed Bath & Beyond is one, right?
Bed Bath & Beyond. So another thing you have to understand is that they saw this started working, right? And on the day that GameStop really started ripping higher, on the day it broke 35, it was up 60% in a day. On that day, all the other stocks that were popular on Reddit started to run too. Because when that one started working, I think people started to see
we could do it again.
well, they started getting confidence. Maybe the lurkers finally dumped their money in. Everybody's like, okay, let's go. And so every stock that was popular in the Reddit portfolio, this was only 10 days ago or 8 days ago, started ripping higher. Like Palantir, which had been range bound for 4 months, broke out went over 30. And then you have these other short. Then they started targeting other high short interest stocks. They're like, let's bankrupt every hedge fund out there, every long short hedge fund. So I mean, a lot of hedge funds, they run long short, which means that they have a short book that's similar in size to a long book. So if the market drops, they're trying to make money no matter which way the market moves, like the broader market, by having things that will fall more than the market when it goes down and gain more than the market when it goes up.
Right.
So they're trying to make the difference between those two. So AMC movie theaters was highly shorted. Dillard's, this clothing store that's popular in the South, they're highly shorted. Lots of other stocks.
Right. I mean, for people who, if this maybe isn't obvious, we haven't mentioned it, but basically once this became in the public limelight, and then there was, especially when there was this action from places like Robinhood to try to contain these Reddit stocks, then what happened was the energy on Wall Street Bets and on Reddit accelerated in turn, and now it's like now it's experienced by people who are active on Wall Street Bets as this holy war. Essentially, it's like we were taking down the bad guys who were trying to kill GameStop. Then the bad guys got even more aggressive and instituted these unjust, arbitrary restrictions on us out of nowhere. And so now it's like a war to the death. And where do you think it's going? Like, how do you think it's going to shake out?
Just one more thing. Another thing that they did is they went through Melvin Capital's portfolio and they found every short in the portfolio and they started buying them all. So it's like, they are really trying to blow Melvin Capital out of the water. I wouldn't be surprised at the end of the year down more than 100%. But it's kind of like any hedge fund that has any large short position now. Like yesterday, they were covering, which is why yesterday was such a big drop, because this started happening overseas too, on the Australian stock exchange, on the British stock exchange. Like every heavily shorted stock started ripping upwards, and so it's kind of like, it used to be the case that if you were a short seller, you take out a big short position, then you publish your research saying why you think it sucks, and you try to drive the stock down, try to make it come true. But nowadays, if you had a big short position, then you published a position that says this is why you should short the stock, like that's just putting a target on your back. Like how things are right now, that's a way to get a harpoon right through the chest.
Speaking of spiking upwards, our viewer count is ripping upwards. So folks, we're about to get into all the nitty gritty about how this is going to pan out politically and different other theoretical interpretations. So I want to ask you real quick, if you're active in some kind of private DM group or some Discord server or whatever, any group of people you think would be interested in this conversation, do me a favor and just give them a link to this live stream. Bring your friends in, because we're going to be hanging out for at least another, probably another at least 30 minutes, probably more. And now is when, we're going to really get into the good stuff. We kind of went over the basics, wanted to give everyone a basic summary and explanation, but now it's time to really try to unpack where all this is going and what it means. Because in my view, as a political scientist, as a political theorist, this is truly fascinating and frankly, quite exciting, uncharted territory. So I'm curious to start, Jacob, with your perspective on how do you think this shakes out just financially, from your perspective as a trader? Like, what's your bet in terms of who's going to be the winners, who's going to be the losers in 1 week, in maybe a few months, however you see that?
Well, I might jump around a little bit here,
sure,
if it's okay. And I'm sorry, I'm not following your questions too exactly, but as like just information comes to my mind, a lot of adrenaline in my system and not too much sleep. So it's like, I have to deal with however my mind works in a given moment.
It's cool, man. It's been a crazy week.
It has been a crazy
week.
I
don't have money in the markets like in any way related to this, except Bitcoin, which I do think is quite related to this in the long run, which we'll talk about. But so for me, it's just been super fun and entertaining to watch, but you've been in the thick of it. So it's okay. With that as a caveat, no problem.
So the question is, how is this going to shake out financially? Well, I think as of 2 days ago, or even as of yesterday.
And this is not financial advice.
Yeah. You had, it was just checkmate, right?
It seemed like it.
Yeah. It was just like 2 days ago, you had a celebrity starting to tweet about GameStop, sorry. And get and posted TikTok about buying the shares, which was a new level of hype.
Who was it?
Elon tweeted about it.
Yeah, I saw that.
Then Chamath, he YOLO'd $100,000 worth.
But who on TikTok?
On someone named Kia or Mia,
A girl. Okay.
yeah, some girl, pop star.
Okay.
This is a whole new level of like
Yeah.
crossover, right? So this thing could have went to, I mean, it still might for all I know, but with the countermeasures being deployed today, which we'll get to, it might cut it off. But this thing, when a comparable short squeeze happened to Volkswagen in 2008, it was, by the way, which was engineered by a single entity. It was engineered by Porsche. Porsche is as much of a hedge fund as it is a car company. They bought up a bunch of shares of Volkswagen. They knew it had a high short interest, and then they published that they had done so over the weekend. Got the shorts nice and scared. Then come Monday, people stampeded to the exits. There was 16 shorts for every one share outstanding. That was free float after Porsche bought up all the extra shares. And Volkswagen became, on that day, the most valuable company in the world in terms of market cap. So I think that was over a 10x increase. It was bigger than Exxon, bigger than Apple, bigger. And Volkswagen's not that big of a company. It was a car maker that was in danger of bankruptcy at the time in the 2008 financial crash. And it popped to become the most valuable stock on the market. Mm-hmm. So GameStop, if it did that, it would be another 100x from here. Which would put it around
100x higher.
Yeah, that would put it at a $4 trillion company. I guess 50x would take you to Apple's market cap, right? $2 trillion.
Wow,
that could happen if people aren't selling.
But this would only happen if Robinhood and the various exchanges allow people to start buying again.
If there was no countermeasures, I think we could be heading there. But at some point, what will happen, because there's just it's just so insane to be short. And the shorts aren't backing down, but at some point they start backing down. Right? I mean, a margin call is when your broker requires you to put up money to maintain a short position that's going against you. Mm-hmm. And even if you're a billionaire, like if the stock's going to infinity, that's a big margin call.
What are the chances that Robinhood and places like that just don't allow any more buying for like weeks? Is that feasible?
I mean, it's interesting. So like I was saying, like as of yesterday, it felt like checkmate. It felt like there was no way for Robinhood, for Wall Street Bets to lose. And there was just more and more firepower coming online that was outside of Reddit. And this thing was going to squeeze until the long started taking profits. Classic bubble behavior. Something goes to infinity. Then at some point, the last one out loses.
Right, which is something we should talk briefly about, because the narrative that this is just like populist economic justice is a little nuance should be added to that, because for the Wall Street Bets folks to make money, they have to sell the stock, and the last people to sell the stock are going to be out money. So it's not this like totally cozy, everyone on Reddit wins and the big guy gets taken down. Like there will be losers even from the Reddit camp in an ideal world. Even
it's called being the bag holders. And right. And given the mentality of Wall Street Bets and how idealistic they are, they're very likely to be the bag holders.
Like they're all saying, if you read Wall Street Bets, it's all like hold as long as possible, keep holding. But there's some disingenuousness there, because at a certain point, for it to be a winning, you have to sell. And so that's what's kind of sketchy. Is like it's not just this populist economic justice thing. I
mean, but it can last longer than you think it can. And I mean, the Volkswagen bubble, it popped in one day, but that was because it didn't have this populist movement behind it where everybody was trying to buy and hold Volkswagen. I mean, right. So I would argue Tesla's in sort of a slow motion bubble like this, where its valuation has ran far in front of its value. And its market price is insane, but Wall Street Bets likes Tesla, and lots of people like Tesla. And so they buy it regardless of the underlying fundamentals. And I think, Tesla, I've been calling for it to pop for a year now, and it's not popping.
Well, what's so interesting here that I want to comment on briefly is that for a lot of the people on Wall Street Bets, because I've been watching it closely and reading it obsessively because it's so interesting and exciting and fascinating and bizarre, is that a lot of the people are saying, I don't even care if I make money anymore. This is, they describe it in the terms of holy war.
Yeah.
And so there's this very fascinating phenomenon going on right now where it's like, with things like Bitcoin and things like, Reddit driven market prices rising, it's like the code base of finance is being open sourced to a degree that we've never seen before. Like people are realizing that a lot of finance is essentially a matter of belief. And we now, through the internet, have the power to engineer systems of belief, whether that's through, brilliant kind of software solutions, or it's just through sheer kind of mimetic creativity and organization. And that's profound in its own right. If that were the only thing going on, it would be revolutionary. But what's also going on is a kind of quasi-religious aspect being loaded onto that or converging with that, where it's almost like, as finance is becoming open sourced, it's almost like religion is also becoming open sourced. I mean, we're both Christians, so we won't like want to sign on to that completely, but in some non-trivial way, it's like finance and belief systems as such are becoming open sourced, and people are using their power to engineer these systems to a degree that I think we've never quite seen before. And whether you think, you might think that's interesting and exciting and liberatory, you might think that is horrifying and scary and problematic, but that's kind of what I find most interesting. Is it's not even so much about the economic populist social justice angle, which is one of the common frames at the moment. It's something much deeper. It's like these essential social institutions, whether it be finance or religion, are weirdly converging and being re-engineered from the ground up through the internet.
Yeah, I think that's right. And, there's something religious about the Tesla stock ownership in particular. There's lots of memes of Elon photoshopped into various icons and things. I don't own any Elon icons, but probably some people do out there. And a lot of what's been, driving this is really a hunt for the heretics, right? Like the Wall Street Bets has been frustrated all year by short sellers who publish research against the stocks that they like, because they drive the stocks to ridiculous prices. So like Citron Research or Melvin Capital, this isn't the first time they've crossed swords with Wall Street Bets, and Wall Street Bets has lost a lot of those battles. So there is a way of, and Melvin was short Tesla this year at some point, I believe. That's one reason why Elon is tweeting out the short squeeze, tweeting to help the short squeeze and to drive people to do it. It's because he really wants to put Melvin in the ground, which looks to be what they did. I didn't talk about the countermeasures yet. Should I talk about the countermeasures?
Right. What other kind of countermeasures might we expect to see?
So this is, I think it's unprecedented. And I think what we're seeing with a lot of brokers today, restricted trading and these meme names, include GameStop especially, but AMC, Nokia. I almost feel sad that, I'm some of my companies that are heavily shorted didn't make the list. I'm like, am I not that cool? But, I don't tend to pile into the most popular trades. A lot of these brokers started restricting it, and people asked the Treasury Secretary about it at one of the press conferences, and she said she's monitoring the situation. And there's this feeling that it's similar to what I got when Parler was shut down, and Parler was kicked off. All the App Store. It was this Twitter competitor that didn't moderate with the same editorial stance as all the Silicon Valley companies. Mm-hmm. Every Silicon Valley company has someone from the SPLC like moderating all their comments, and Parler didn't. Parler billed itself as a more conservative Twitter, and so they got kicked off of every App Store. They got their hosting pulled. They got their payment processor pulled. They got everything gone. And the idea is, we didn't realize that we were living in a cartel-controlled economy, like that there was an ideological cartel that, people say, when people complain about moderating on Facebook and Twitter, people are always like, well, go build your own platform. This is a free market. But that argument only works when you're not living under monopoly power when it comes to infrastructure. Like if I can't go and build my own platform, then it becomes a little bit more nefarious, right? And I think with Parler, that's what we saw. It's like, okay, you can build your own platform, but you can't use any web hosting. You can't use any payment processor. We've seen other conservative platforms have trouble with banks. Like really, you have to build your own country. And the more that you squeeze people out of the market, the more and more resentful they become. And I think in a very similar way, what we're seeing with this Wall Street Bets phenomenon is that, these 20-something, these Zoomers and millennials, they figured out how to hack the market. They found the cheat code, and it started working for them. They started winning against, probably Gen Xers and Boomers, and suddenly the rules of the game had to change.
Right.
And so far there hasn't been any legal changes, and as far as I know, nothing that they did was illegal. And it's all within the rules of the game. Like if someone publishes a forum post saying this stock is good, or there's a possible short squeeze here, like how is that different from a normal Wall Street company publishing their research and saying this stock is good?
Right. Or buying stocks and going on CNBC and saying this is a good stock, which is what they all do. I mean, even Congress people, right? Politicians, these people own stocks. They have vested interests.
Nancy Pelosi the other day, she bought
Tesla calls, right?
She bought Tesla Leaps, long dated calls right before Joe Biden had put out a executive order to electrify the car fleet of the federal government.
It's hilarious. So what I think is going on, one of the things I think is going on is that people who have status and money that is based on privileges within legacy institutions, these people are becoming more and more desperate, and it's leading them to lash out or try to regain whatever last ounces of control they have in increasingly obvious and naked ways. To me, that's one of the things that's most striking about a lot of the stuff that's going on, but specifically looking at the Wall Street Bets fiasco, it's like Robinhood will just simply say nakedly, okay, there are these 4 stocks that this random internet forum is hyping. We're just going to pause buying and selling on those stocks. The way that it's so pointed and arbitrarily, specifically, obviously unfair, and they don't even care, right? It's like you'd have people like Dave Portnoy and other people saying like these people should go to jail. Like this is crazy. This is like this is an affront in public.
It's cartel behavior.
But they're not even trying to hide it, is what I think is interesting, because they don't really have options. They don't have the option to. So that's why what I see more and more across different domains, not just in finance in this kind of dramatic example that we have this week, but in other ways also, is that the institutional power holders are going to do literally anything it takes in plain sight because they're hanging on to their very last shreds of power. But to me, what all of this suggests is that the forces of the outside, whether that be Bitcoin or Urbit or anyone or any institution or organization that has made major bets on some kind of truly outside hypothesis that goes against the drift of legacy institutions, all of those people are going to be winning more and more. They already are. Like it just seems that seems where things are going. Like no matter how this Wall Street Bets situation pans out, probably the real winner is crypto, I think, because what happens when you have a bunch of Zoomers who realize they've hacked the source code of finance and they found the cheat code, as you said, and then an arbitrary number of institutional power holders basically just say, oh, you're out of the game. They're going to look, just a little bit to the left or a little bit to the right, and they're going to say, oh, there's this whole other monetary technology that is invulnerable to that kind of arbitrary power. Oh, okay, I'm going to obviously go play that game. To me, Bitcoin and crypto more generally is an obvious winner from this fiasco, but that's how I see it more generally. What do you think about that?
I mean, I think there is a part of this anti-establishment energy certainly behind crypto, but the more successful crypto is, like when Bitcoin hit 40,000, you started hearing talk about regulating it, right, and trying to do KYC on all self-hosted wallets, which would really defeat the purpose of having Bitcoin. So I think there's a way in which this drama of the outside versus the inside is playing out in many different realms, and the inside is constantly. I mean, it has a lot of power. It has most of the power,
but they're still losing over and over again.
Yeah, I mean that's the thing. It's like I think it's like the Roman Empire when it started to lose a little bit of its territory to barbarian invasions. With any individual barbarian tribe, the Roman Empire was vastly more powerful then. But they were losing battles and losing little bits of territory and getting picked apart. And I think that can lead to, trends happen, right? Like things tend to trend. So I do think there's a way in which the establishment is getting a little fragile and a little worried. But any given incursion, like whether it be GameStop or Bitcoin or even like the riot at the Capitol, I think or Parler, I think can be shut down. Like they have a lot of power. But each time they have to sort of change the rules of the game that they set up themselves to stop themselves from losing. I think it does weaken their position a little bit.
I think a lot. I think the way that,
well, what's interesting about finance though,
sure,
is just that, one thing, I think left-wing activist groups are sort of like this controlled chaos, where it's like, if you want to be chaotic, but you want to do it in a way that completely reinforces the establishment, then you join like BLM. But I think in finance, you can't really create like controlled, like a pet outsider that's like a fake outsider that's like the tool of the insider, like a left-wing activism, because ultimately it's about winning and like you're working on this objective medium, which is profits and losses. And so at the end of the day, it's really easy to tell someone that's going to go out and protest with Antifa that you're fighting the system, man. And meanwhile, like every corporation is like on your side. But that's because political outcomes are very vague. And you can say like, yeah, it felt like I was fighting the system. And strangely, like, the cops didn't arrest me when I burned a cop car and threw a brick at someone's face. Like, strangely, FBI is not coming after me later to like hunt me down. Strangely, like, my slogan is appearing on like
corporate banners
on like the Lululemon website. You can ignore those, but in finance, it really is, at the end of the day, you have objectivity. And I think the idea that you could have like a captive Wall Street bets that sort of like funnels this energy into an unproductive and trapped place where it can't endanger the establishment, really can't happen, because they need to win money or they're not going to stick around.
Right. So yeah, I see what you're saying. I think that we could see in the next few years something kind of like the short squeeze phenomenon, but with institutions more broadly. I like the short squeeze as a mental model, because what it really shows is that in the distribution of power, when there are these kind of competing political games over culture, there can be the situation where, the movement or the transfer of power from one group to another is not this slow, gradual thing. But once it starts to take off a little bit, then it starts to accelerate exponentially, which is essentially what happens with a short squeeze. But I think you can see something similar happening with politics in a way, because let's say, for instance, Bitcoin continues to rise in value. Well, you could imagine a new breed of politicians, right? Realizing, oh, okay, maybe I'll hitch my wagon to this, because, especially if the US dollar becomes, decreasingly attractive or whatever, or the American economy has more, systematic problems or something like that, right? And then at the point that institutional power holders started defecting, then it would just accelerate the trend, right? So I think in today's world, which is so networked, you want to be looking for nonlinearities everywhere. Like, all the action is going to be nonlinear action. Everything that's most interesting is going to be nonlinear. And to me, I just see a lot of different domains where you could see this kind of accelerating defection phenomenon going on. So I see it all over the place. Like, from my own perspective, just with my own background, academia is always one of my go-to examples. Like, I think that right now you have a ton of people, right, who are invested in this legacy institution. Essentially, they have credentials and work experience and basically investments of different kinds in this legacy institution. which everyone in it talks about regularly being, really broken and crappy in many ways. And right now, there's only a small number of people who are defecting from academia to basically do what I'm doing and build successful, financially attractive and growing, totally independent intellectual operations. That's still like a very fringe thing. When I tell people that's how I've organized my life now, that it requires a lot of explanation to even communicate it. But there are definitely more and more people doing it who I pay close attention to. At a certain point, there's going to be enough of us doing it that everyone inside academia is like, oh, I'm just going to do what Justin's doing. It's obviously better. And once 2 or 3 do that, just to follow a already established new model, it's going to be a very short period of time, I think, before all of them do it, because why wouldn't they? So I think that's just one example. Not to make this about academia, I think that's just one example. I think you're going to see that in many different domains, which is why personally, everything that's happening right now says to me that there's never been a better time, and this is not financial advice, but there's never been a better time to pretty much like put all of your eggs in the basket of outsider hypotheses and shift your resources away from these legacy institutions, which seem to be hysterical and desperate.
Yeah, there's never been a better time to YOLO.
But not even YOLO, because I think you can. I mean, that's an interesting comment.
Aren't you YOLO'd on your business?
For people who don't even know so YOLO is a kind of Wall Street Bets term for like putting all of your eggs in
all your eggs in one basket.
Well, here's what's interesting. I don't think you need to do this in a way that's YOLO. Like what I was just describing, I think you can actually have a diversified portfolio of outsider bets, honestly.
It probably just a couple though. But I like what you're talking about as far as like the short squeeze as metaphor. Like I think a short squeeze is when the people in the bad position are motivated to act against their own interests. Like they sort of have to act against their own interests to prevent even worse damage from happening, right? And that causes their demise to accelerate. And I think what you saw with legacy media and social media was a short squeeze on the legacy media. Like everyone had to join Twitter. Like Twitter was disrupting media, and people were going to Twitter to get their news because it was faster. You could have multiple perspectives, and then suddenly you see legacy media embrace Twitter, but that increases its audience, and sort of in response to that, legacy media has been trying to tame Twitter. But the damage in a lot of ways has already been done by legitimizing this multipolar structure, the people who were in charge of the narrative in the past can be dunked on and picked apart in a very public way. And also Substack, I think, is happening where, like, if you get canceled now, you get a pay raise,
yeah.
Right? If you're in media. Maybe academia, I don't really see the short squeeze happening yet, but it's going to happen when it's more painful not to participate in the kind of things that you're doing than to participate in them. Right now, it's harder to participate than to not participate. But in the future, like especially when you look at how poorly paid a lot of people are that do the teaching in academia, like I think there can be an acceleration where there's a clamor to be involved in alt education.
No, but that's what I'm saying. It's already here. The word just hasn't gotten out yet fully.
Yeah, well, you haven't quite seen that first bend in the elbow. It's sort of like building. The thesis is there, and then you're waiting for the.
Well, I think it's actually the situation with academia and intellectual life more broadly is kind of like Wall Street Bets, in that Wall Street Bets had been going on for quite a while. It only now just kind of hit public consciousness in this kind of big way.
Yeah.
But I mean, like lecturers who teach courses in my little school make more than adjunct professors per course.
It's not.
People just don't know that yet.
It's not hard to do.
People just don't know that yet.
Yeah.
So it's like once these things become, they enter the public consciousness at a certain point, and then you see these like nonlinear takeoffs. And I'm bracing for that in pretty much all cultural domains that have legacy institutions.
Yeah.
What do you think from a financial perspective? Anything else that is interesting about all of this stuff going on right now that you want to riff on a little bit?
Yeah, well, one thing that's interesting is like, people are like, well, how can one little stock or just a couple of stocks really matter? One thing to keep in mind is Mike Green's research. Mike Green is this guy. His handle on Twitter, I believe, is Professor Plum 99. or maybe Professor Plum, but he talks about how markets are thinner than they used to be. 'Cause basically, the rise of passive investing, which was the boomer strat, right? Which is you take your money and you buy ETFs with it, like mechanically every week, and you save for retirement that way, and you never sell anything until you're retired, and you never think about what you're buying. You just buy broad-based ETFs. That's become the majority of the market. And so it only takes, I think, 1/10 or even smaller, maybe 1/20th the amount of money to move the market as it used to. Basically, everyone's a hodler now. Like the stock market's made of hodlers. So that amplifies when you think about, okay, so Wall Street Bets is going to blow up a hedge fund that has $4 billion of assets. Well, that means they have to liquidate probably $2 billion on their long book. That really moves the market. That's what we were seeing yesterday. A couple of stocks that I like, that I follow, they were dropping to the lowest level in more than a month. And I'm like, what's going on with these guys? And it's because these hedgies are liquidating their long books. So it takes a lot less to create systemic risk than it used to. And that does favor the kind of tactical investing that Wall Street Bets is thinking about. Like, the idea that we can engineer a gamma squeeze or a short squeeze. Like, it takes a lot less money than it used to. So that's something that's interesting. I don't know. I mean, I think, Roaring Kitty, whatever his next move is, his touch is gold, man. Like this guy's great. I mean, you should look at his last live stream. It was when GameStop cracked 70. And I think he was at like 11 million, and he's just so happy. It starts off with him just laughing and at the camera, and he's wearing his sunglasses now. And his old videos, he was like clean cut and like serious, and his new videos, he's wearing sunglasses and his hair is all long, and he's like,
maybe I could get him on the live stream. If any of you are subscribers to Roaring Kitty, maybe leave a comment in one of his videos saying, go on Justin Murphy's other live stream.
Yeah, I would love to know more about the guy. I wonder what his backstory is. Like, I do think he's a pro or a former pro, just given how bright he is about the stock market. But I would love to know more about him.
So do you think that Wall Street Bets subreddit will try to increasingly do these types of engineered plays where now that they're aware of their own power, or do you think that's going to be maybe snuffed out? Like, there'll be a major legal crackdown and all of that is going to go away quickly.
So I don't think anything that Wall Street Bets has done is illegal, but however, new rules can be made. In response to this. And, the establishment is butthurt. Also Reddit's a bunch of C words. The admins, trying to think a nice way to say
why, what's bad about them?
Well, they're just very like, they're part of the Silicon Valley ideological cartel. Like, they hew center left pro establishment, and they'll cut down on anything that offends your average housewife in Menlo Park. So I wouldn't be surprised if, even if it's not outside enforcement action, if the Reddit admins decide they don't like the bad publicity and they cut it off. Like, we think about Reddit as being like this chaotic place, this place of chaotic energy and freedom, but it's a tightly manicured and controlled place of chaotic energy.
Right. I wouldn't be surprised if Wall Street Bets got kicked off Reddit, but then they would just reconvene somewhere else, presumably.
I mean, that could be big because, Wall Street Bets is huge. So, and recently it's been the only Reddit I've been reading.
Something like 2 million people on it, right?
Yeah, 2 or 3, I think 3 now. But they've been growing at a very fast pace. I mean, if you could invest in that stonk,
don't you think that once there is a truly censorship resistant or censorship proof social network, like it's going to win. It's just a matter of when.
Yeah, right? I mean, they should be on Urbit, for sure. But
it could happen. I mean,
they haven't figured it out yet.
The friction.
Their Discord got shut down. Their Discord had hundreds of thousands of members.
See, to me, this is an inevitability that everyone should basically brace for and organize their life around. Because like the only problem really is that there's still a lot of friction to get on things like Urbit, but that friction is going to decrease over time. And the censorship from big tech is going to at least stay constant. And it is just an inevitability, I think, that eventually a critical mass defects into some censorship-proof platform, and it becomes literally unstoppable. To me, that's a foregone conclusion. It's only a matter of when. And so if you think that's any time, even in the next 10 years, 20 years, that would be truly so significant that you should probably start organizing your life around it.
Yeah, well, the thing is that people mostly will go where the UI is best. And like most of the time you don't get censored. So people ignore like whether or not their platform is censorship proof, right? Like Discord's fun to use. It's easy to use. It does voice chat, does video chat, does streaming. It breaks up into multiple chat rooms. It has just a lot of nice features to it. So people go on Discord. And for 99% of people, they never have a problem with censorship on Discord. And then Wall Street Bets, they got kicked off. So it doesn't matter until it does. And the problem is that if you're trying to start a censorship resistant network, you get riffraff. Like it's the people who have problems with censorship that get kicked off that are going to be your customers. So it tends to be like a poor quality audience to start your new network with.
Currently.
Like if you go on Gab, it's like all Nazis, right?
I completely get this problem, but that's because currently the defection cascades are not big enough.
Yeah. Well. So what happens is, I think, as the mainstream gets more and more censorious, is that they create like a more and more attractive anti-mainstream, right?
That's
like
right.
They have their bubble, and they kick people out of the bubble, and the more people they kick out of the bubble, the better the area outside the bubble will be.
Which is definitely already happening. It seems like all the cool people worth paying attention to have been canceled or pushed out of something or chose to leave something. And I see it as like already happening. Like this isn't speculative. The bubble of actually cool people worth listening to on the outside is increasing every day and getting more and more powerful every day. To me, Wall Street Bets, this whole fiasco is just one of the most recent examples. Trump himself, although I'm not a Trumpy myself per se, I'm not like virtue signaling against him either, but another profound example of it, right? There's just more and more examples of outsiders of outsider figures or organizations or communities who are not supposed to be doing something, who all of a sudden are able to do it in some way that all of the legacy institutions said could not happen or would not happen. So to me, it's like, I don't know. To me, it's not even, these aren't even kind of like speculative debates. It's the questions I'm really interested in are when, how soon, and what can we do to make that even sooner?
Well, I love your optimism, Justin, but I'm not as confident as you that the end state is the outside winning.
So you think big tech could basically get enough of a stranglehold that, and combined with the government control, that everything is snuffed out and we live in a truly totalitarian society in the not too distant future?
Well, the inside has a lot of power if it's willing to wield it. And we have seen states like the Soviet Union was an insider state, right? Like the outsider ideologies were forced to use like they're like mimeographs to like pass around pamphlets and like, they had no public airing of their point of view. And that I think those kinds of states tend to be fragile, right, and temporary. China's trying to engineer the most perfect and stable insider state. But a lot of the insiders in America would love their own insider state. But I do think America is probably too chaotic and multipolar by nature for that to succeed here. But I do worry
America.
about. I don't want to live in a state where, the rough edges and the dissidents are snuffed out. But it's possible. I mean, the inside can be, like I said, the insiders have most of the power.
Yeah, but you just said to yourself before a minute ago that if big tech or the U.S. government were to engage in some sufficiently large and aggressive crackdown, it would lead to the number of people being willing to defect. That number would be so large that it could be enough to break the threshold, right? So there's I have this kind of threshold mental model, right? Where it's like, right now, the forces of legacy institutions are not so oppressive that most decent people can kind of deal with the censorship. It's not that oppressive for most people. Now, if you're like a true free speech radical and you just need to say whatever you want, then even the current amount of censorship can be oppressive enough that you're willing to just kind of break all the rules and be an exiled loner or whatever.
It offends me.
But it's a relatively small number of people right now who need to go on the radical outside just to feel at peace. But if big tech and or the US government were to become increasingly oppressive, then it just follows that the number of people whose calculation is defecting from all of this is better. That as that number increases, we will reach a threshold where the alternative places like Gab or Parler aren't just the riffraff, but actually all of a sudden it's cool, smart people who and want to hang out with have to go to these outside like counter institutions or whatever you want to call them. That's a threshold thing. That's one of those dynamic processes where it seems like nothing's happening until all of a sudden everything's happening. And it seems like Gab is only neo-Nazis, and then one day the censorship is going to be enough that whatever the Gab alternative is at that time, everyone goes, and it's unpredictable. Just like the Wall Street bets hitting everyone's radar in a week happened in this kind of nonlinear fashion. So yeah, I think like the realistic model has to basically prepare for that and expect that.
Yeah, I think that's right. And I think the way to do it is to create like a healthy subculture on a platform that can serve as the seed of something to grow.
Indiethinkers.org, shout out.
So it's like, it's definitely not Gab, because like Gab got the worst people first. But I do think, I think America is too chaotic and loves freedom too much to really give in to a complete insider state.
Hell yeah, it can't happen. It's not possible.
The dream of decentralization is to try to engineer a complete outsider society. Something that's like has no control. It is complete chaos. And I kind of fear what might happen if we do have like money and speech that can't be controlled. I'm not sure that that's paradise. I think that has its own issues. And I guess I like how things are, where we have a lot of freedom. But if something truly awful happened, like one of these decentralized mobs, like, putting together an atom bomb or something, we have a fairly good centralized resources to try to shut them down. But at the same time, there is like these strong mental problems in our elite people that like they're fearing their loss of power, and they're reacting in these chaotic and these like unfair and weird ways, and it's making me fear a complete the attempt to crush the outside. But
I mean, I might just be drinking too much of my own Kool-Aid, but I am just like so convinced. My conviction is very high that all of the legacy institutions are essentially, their days are numbered, and you can see it in their attitude, you can see it in their eyes, you can see it in their desperate overreactions to things, in their kind of naked, shameless displays of arrogance and desperate control seeking behaviors, like combined with just the increasing number of profound and extraordinary examples where random outsiders are having all of these unexpectedly powerful plays. So to me, it's just like it's an extremely exciting time to be alive. I think if your nature is to be, an outside thinker or creator. But I might just be drinking too much of my own Kool-Aid. Maybe we are on the verge of totalitarian takeover.
I do think Americans love freedom too much for like the totalitarian homogeneity to really win. But I do think critical race theory is and its allies is like an attempt to like breed the love of freedom out of America.
Wow.
So it's they realize that like the culture of America will not cave to a totalitarian state. So you have to re-educate the people to be the kind of people that will accept totalitarianism. But like, how many people, when they start like seeing their kids being taught that their race is evil in elementary school, like are going to lay down and take it. I think in the left coast, they'll definitely lay down and take it and ask for more. But in a lot of the country, that's not the case. But we'll see where that goes in the next 10 years or something. I'm not worried at its current size, but like that's kind of the next play is to remove the love of freedom from Americans.
Honestly, I'm becoming more bullish on Urbit just because it's such a completely different model that I think you could imagine a scenario where it's like I was describing before. It seems like nothing's happening. Gradual, imperceptible growth and adoption. And then all of a sudden, power distributions change and it reaches a certain level of accessibility, or maybe US censorship reaches a certain level of oppressiveness. And then all of a sudden we have like a whole new internet. That to me, I wouldn't put the probability super high or super soon, but in recent weeks and months, I've significantly, I think, increased my assigned probability to that sort of thing happening through a fundamentally different networking model. Because it does seem like all of the internet as we know it and the big platforms, they do seem to be kind of coordinated enough, in cahoots enough, and kind of politically contaminated enough that you could imagine, I think, the only real alternative being a fundamentally different networking model that would be immune to that sort of thing from the ground up. And that's what Urbit represents. So, I
mean, I think it would be pretty cool to have message boards on Urbit. I think there are message boards that run on Urbit now. I'm not on Urbit. I kind of looked over at your live stream comments for a bit. I think someone asked me that. I've just not had the time to put it together. It does still have a bit of a high barrier to entry. So I am waiting for someone to help me get on Urbit.
All right. Well, I'm sure we got people in the audience in our network who will do that for sure. So reach out. All right. I think we should wrap this up. So if you're watching on YouTube, please subscribe to the channel and click the bell. I'm doing a bunch more of these in-person live streams from my little home studio I'm building up here. Look, I even painted the walls. Aren't you impressed? How much work I put into this?
I did have one more thing I wanted to rant
about.
Oh,
yeah, please. And by the way, person in the chat saying that Justin should not talk so much. Hey, this is my live stream, first of all. Second of all, I barely talked this entire time. I was a very modest interviewer, mostly asked questions and let Jacob give his very interesting perspective. So fuck off. How about that? Go ahead, Jacob. What was your final comment?
That was very Chad, Justin. I appreciate that. Well, I wanted to try to get some rants out.
Yeah, I got time.
I've been stuck in my head about psychedelics and Christianity.
All right, maybe we're not done. I got time. I'm having fun. Go for it, Jacob.
Do you? I know you have something. You have like a dinner or something to go to.
In a little
later,
bit, but not too soon. It's all good.
All right. So, I do think that a lot of people aren't prepared for this yet, and I'm not saying. I think a lot of people aren't ready to talk about it in an intelligent way. And if you got most people on here to talk about this, they're not going to speak about it in an intelligent way.
Which is what?
The fact that I do believe that one of the major pressures and sources of change to the Christian movement or Christianity in general, American Christianity over the next 20 years is going to be the reintroduction of legal psychedelics into society.
Hell yeah. Hell yeah.
And I don't think anyone's ready for it. Like if you ask Christian pastors what they're most concerned about now, what's putting the most pressure on the church, they would say like the culture war, materialism, consumerism, and nobody's really thinking about psychedelics. And that's sort of by like the nature of who is Christian right now. Remember my theory of bio-Christianity, that like all the open-minded people have left the church mostly. So what remains is more by nature closed-minded people. And so like their response, I think, to the rise of neo-psychedelia has been to ignore it and hope it goes away. And it's not going away.
Definitely not. But I think psychedelics are super pro-Christianity. I think a lot of America is going to get on psychedelics and they're going to become more Christian.
I think that's a possibility. So I think what psychedelics do, and I could rant on that for a while, but I mean, they certainly reattach people to their sense of the spiritual, and a desire for like in-person connection and community. And I think that can be filled by religion. I think most American Christianity, though, like completely lacks any mystical side, and that's a hallmark, especially of evangelical Protestantism, which is sort of this flat, boring religion that's about a book. Like if your religion is about like a book that's like hard to read, like I don't think that appeals to like people that are, being inspired by psychedelics. Now, at the core, there is a Christian mystical tradition that, especially in Protestant, in Catholicism and Orthodoxy, I think it's worn a little bit more on the sleeve of Orthodoxy. So I would encourage like my bishops to sort of get in front of that and be able to like communicate to people coming from a psychedelic world. But the other I think branch of Christianity, and where most of the energy is going to go, unfortunately, I think this is not the proper place for it to go, is going to be into like more sort of charismatic Pentecostalism, and probably new kinds of Protestantism that are formed around like it's sort of a bastardized version of like hippie psychedelic Hindu-ish culture, like bastardized into Christianity.
I completely agree. It's already happening. I think you're going to see charismatic kind of pseudo-Christian preacher types on like Instagram blow up, and they're going to be hip and kind of youngish and attractive, and they're going to have their own little churches more and more. And I think this is very satanic and really should be stopped immediately with the full force of all possible social technologies.
Well, I think like I have a lot to say on the topic of psychedelics and like how to use them towards the good and where they go wrong. But one place that I think psychedelic use goes wrong is where people start making like ontological extrapolations from their psychedelic experience. They try to say like the world is this way because I felt this way when I was on mushrooms. And I mean the mystical visions have been a basis for theological musings for a long time. But I think what's great about Christianity is that sort of the fundamental ontology of Christianity makes sense when you're sober and when you're having ecstatic mystical experiences and everywhere in between. So it's because and I think that's true of other like mainstream religions as well. Whereas I think psychedelics, they tend to, when people are part of a psychedelic culture and that forms the bedrock of their spirituality and they don't have anything else informing it, I think they tend to lean into somewhat nihilistic and somewhat simplistic sort of moralities and worldviews.
I think this is a fire topic. I think this should just be its own podcast.
Okay.
Because we could easily talk about this for another hour, and we should soon. So also, before you forget, go and subscribe to Jacob's YouTube channel, which I put a link to in the show notes. So yeah, Jacob is my buddy in Austin. He lives nearby, so I think he's probably going to be a regular around these parts. So if you have other topics you want us to talk about, let us know. I think we should wrap it up.
Wait,
we got to leave them wanting more. We can't stay on too long. But go ahead. You want to reply to a comment?
No, that's fine.
If you want to.
I'm a 3-hour podcasting guy.
Jacob will be back. Make sure you subscribe and click the bell so you can come next time, and we'll try to answer some of the questions people have. All right. Thanks everyone for hanging out. As always, crazy week. Prepare for many crazy more. And
good luck out there, guys.
I'll be here. Other Life Podcast, the only podcast in the world dedicated to exiting institutions. So
I kind of I forgot to talk about I mean we touched a little bit on like the end of the bubble.
You got a final thought? You can give a closing thought.
Yeah, I mean, I think people should know that obviously this can go on for longer than people think. I jumped out on the first day of plus 60% prices.
GameStop you're talking about now.
And or other stocks like that. And I didn't realize that it could go on for another 10 days of that. So I missed out on a lot of gains, but I protected my downside. But at some point it probably will come to an end. I mean, I don't think that GameStop stock is going to be the new currency, that the new monetary standard of the world. Like I think there's a limit to how far it can go up. And when people start selling, it's the last one out loses. There's a book called about financial bubbles. I've listened to an interview I listened to a podcast with the author. I didn't read the book, as people do nowadays. But the title of the book is "Devil Take the Hindmost," and it's a history of bubbles. So I just want to urge caution, especially if like you're jumping in now. I heard someone ask me yesterday about whether or not they should buy GameStop, and that's always the way. It's like when people that have no interest in finance start asking me if they should get into something, like that's usually a bad sign. That thing is no longer no longer such a good. I mean, the risk reward is very different with GameStop at 400. I think it did pass 420.69, so it kind of already hit its totemic value. That might have been the top. If I were a hodler, I probably would have sold at 420.69, and I imagine many hodlers did. And at that point, it starts to be the risk reward is very different. There's the risk is a lot higher, and the reward is nowhere near as high as it was before. And it can be hard to miss out on a trade. But there will be other good trades to come out. And I think if Wall Street Bets survives, some of those trades will be posted to Wall Street Bets. Keep on learning and you'll be able to identify them earlier. And like I learned from this about how to play a potential bubble with a big short squeeze. I got out way too early. But can't really complain. It's been a great year so far. Even though I missed out on, another 10x gain. But yeah, just be cautious out there, guys. And things are going to get frothy. I think the market might rebound a bit when the GameStop trade unwinds, actually, because right now so much of the other stocks are being depressed due to GameStop's rise. But it's going to be there. There's going to be a lot of volatility out there. Like today was a high vol day. Yesterday was a high vol day. And things aren't easy.
Thanks, Jacob. Excellent parting words. All right, gang. Other Life Podcast. Over and out.
All right. Peace.